I was hoping to go back to the concert. Me. Got to find my inner motivation. Good morning, everybody. 20 dwarves, 20 dwarves, 20 dwarves, 20 dwarves. Okay? Yeah, sure, right? We'll make time, right? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Please visit TradersWay.com to open a or live account. You can choose between ECN, fixed spread, or variable spread. Shoot! You can have all three. Fixed spread is great for scalping, for example. Why? Well, around high volatility news events in which you might be scalping, spreads naturally widen. They just do. I mean, that's the intermarket. But if you need a fixed spread, if you always want to know what it is, then that might be great for scalping. Spot trading, go with the VAR, the variable spread, because you usually are less than the fixed spread. It's just a better deal. You don't like paying spreads? You prefer commission-based trading? Great. Boom. ECM, bro. Whatever you need. It's your way, Trader's Way with TraderWay. Good to see you here. It's a beautiful Tuesday morning, the 21st of November. I'll be honest with you, though. I'm kind of bummed, man. I'm kind of bummed. I'm kind of bummed. So I was thinking how lucky I am to have you in my life. Because I'm bummed, man. This wasn't the November or even October that I ordered. Right? Maybe I need a holiday. So yeah, I'm bummed. But it's one of these days where I kind of woke up tired. I've been waking up tired, and I've been trying to get good sleep, and I've been waking up tired. I'm like, I just want to get away, right? But no, I got you. You got my back. I'm here for you. Kind of want to run and hide and play in the sand or something. It's the weather, yeah. It's something, right? But so I don't know. It's been a disappointing October, November. But anyways, whatever. We got each other. We're family, and I appreciate you. Otherwise, I'd probably just be curled up in a fetal ball, crying. Yeah. So, anyways, hey, good to see you. I want to get away. Well, the people that are doing it out on their own very often don't survive, right? Right? It's cold out there. You can freeze to death in the middle of the night. So, all right. So let's just move on. Let's. I'm just saying I'm grateful. That's all. I'm grateful for you in my life. So we are looking at the Aussie yen, and one of the things we were talking about yesterday is, a very big disappointment that it's gone through the monthly M2. But we were at support we identified, I don't know, a year ago. I mean, it's a while back, right? And we're already kind of through the Alamo that we talked about yesterday. But nonetheless, we're still at support. And it came down to, how do you enter this if you're still a bull? And I was giving caution just to be conservative. You should don't assume it's going to be a V-shaped reversal. That it's going to give you some time. You can look for a double bottom, higher high. That's the kind of scenario. So hopefully you remember all of that. This is the gray line we drew months ago. See? Goes way back to April. No joke. And check it out, man. Came down double bottom to the pit. Huh. What do you know about that? So the question is there time to catch this? What do you think? I want to get away. I want to fly away. Yeah, yeah, yeah. That's one plausibility right here, isn't it? Okay. So that's the 5-minute version. Okay. How would you treat it otherwise? This way? Yeah, let me just move this. Yeah, well, if you're going to do it that way, you're going to have to look for, role reversal. Yeah, but you probably would want it long at the London Open. Oh, wait. So anyways, now on this time frame, we're at the resistance area. I would mark this, right? It's sort of this area now. That's an area of concern, right? Where would a bear sell? Well, a bear would do it this way, right? So their sweet spot is the 382 to 618. So I'll mark that. That's exactly where a bear would want to sell. And certainly up here, this is sort of their short-term Alamo. Right? So a bear would plan it like that. Call that a three-wave correction or something or other, whatever makes you emotionally secure about it. And then a bear would sell up in here, right? Right? So if you're a bull and you're not long yet because you didn't trade the smaller time frame, then you would look for the same idea on the higher time frame. You would treat it like a double bottom down here, and off you go. I mean, you're still going to test these same levels, but let's say this time we break it. Okay. And you're long into these. Okay. Yeah, so the 4-hour 21, they're all going to come down, but eventually they'll break and then act as support, not resistance, if you are correct when being a bull. Okay. So I can do all this because I know where a bear would sell, right? And I know where a bull would buy. So you can really start to get some educated guesses here. Okay, so we identified this as a support zone going back a long time ago, back in April. So we know that's a bad place for a bear to sell, and we know it's a reasonable place for a bull to buy. These are aggressive bulls, these are more conservative bulls, but if it's going to go north, it kind of should go north at support. So we look for double bottoms to confirm the support. Well, the double bottoms on a 5-minute chart or a double bottom on a 4-hour chart? Yeah. Okay. Or you're just a bear and you sell high. And you can see up here, you sell off the 4-hour 21, you should be golden if you're a bear, right? Need more coffee. go through gold here. Gold started great, right? Remember? Up in here. There's the M3. It's amazing how we're back down to the bullish support, even though it opened supremely high. This is where, this is where I kind of always caution you not to be a gullible bull. Okay? When it opens high at the M3, what should you be doing? Looking to buy or looking to sell? Yeah, it's a sell. Unless you buy it here off the 21, right? But often when you're buying off the 21, you're above the M3 already. Okay? Okay, so that's just, so it's done that. But if you were a bull, you were kind of wanting it down here, right? But here's the problem. Now it's too low. Sucks. Back into the range, huh? So it's definitely on the bear side. You can see down, clear through the moving averages, back to the moving averages, down, and then it'll come back to the roll reversal, and then it'll go down again. Okay? Or we stay in the range, which means it kind of just bottoms here and works its way back up. Is there a third scenario that I'm missing? Yeah, but that's baked into this, right? That's what this first one is. A J-Lo? No. See, a J-Lo is a reversal, and to me, it just seems range bound. Wait for a breakout trade? Yeah, yeah. But like the swing traders, they know on Monday morning that it's not a buy, unless you're a very aggressive bull, which is fine. But your buy was here, and you might have got sucked into it, which is fine. But then you took a small loss. You probably thought this would hold you up. You probably thought this would hold you up. And eventually you're like, holy crap, none of this is holding me up. Right? So you walk away. Your next buy zone was this blue one, and it didn't hesitate there at all. Absolutely no entry. So if you were a bull, you bought an aggressive open aggressively. Basically, you bought it too high. You were aggressive, though. You got what you wanted down in here. You got this, so you're feeling good. So you figured that. Okay, well, you were wrong. Happens. So, it's disappointing because we all want a trend. So that's disappointing. But if you were a bear, there was like, this is your hardcore sell. And it just blew through everything. You're like, yeah, I know. I sold it at the sell zone, right? So the way I look at it is it's not complicated at all. You're a very, very aggressive bull, and you paid the penalty, or you were a conservative bear and it did exactly what it was supposed to do. Brady says, as a bear, I placed a buy at the central pivot. Oh, at the monthly central. Oh, well, so all right, well, let's take a look at that. So your buy zone monthly is here. So I guess if you're playing it as a breakout, I suppose, sure. It's a little bit lazy of an entry, but Sure. Yeah, that's fine. When I look at the support, however, it seems like we're still there, right? Like whatever range we used to be in, we're still there. So whatever. Yeah, it's not terrible. So you threw it down there when it was up here, and you're like, yeah, if it falls, I'll take it. All right, cool. Yeah, there are higher highs. Yeah. Okay. But this retracement's really got to worry you, though, right? So we'll see. Oil kind of doing what it's supposed to be doing. No clear direction at the moment, right? So I have this. I drew this a while ago, right? Maybe even last week. So we know that this is resistance, right? So we know bears would sell there if there are bears. Okay. Right? So so you could sell it if you're a bear. You shouldn't buy it there if you're a bull. Where would you buy it if you were a bull? Yeah, last week. Yeah. Okay. But I have crude coming down to 52 bucks. Here's kind of a great example of opening high. This is for the month though. It opened too high, but kicked off the moving averages. But you notice it opened sort of above the M3. Where on that other chart we were looking at, it opened sort of down in here, certainly not a typical buy zone and definitely a sell zone. But bears don't like to sell when it's way up here because they're like, "Whoa, that's above my zone, right?" So yeah, it's about the same. I mean, I'm not committed to one or the other. The most important thing is we talked about it going up and up and up, week after week, month after month. We hit the target, and then I say stop. You know what I mean? It's like knowing to buy when it was falling and knowing to stop buying even though it hadn't fallen. Everything else is nonsense, like what you do, right? Do you put your pants on with your left foot or your right foot first? I mean, who cares, right? It doesn't, the thing is, you're not walking around with naked all day, right? Here's some pants. That's the most important part. So yeah, so anyways, we knew to buy down here, and we knew to stop buying here, and the rest is sort of irrelevant. Right? The rest is tactics. So if I gave you a fish finder and took you out to where the fish are swimming, your chances are pretty good for catching a fish. Now, you might be there slapping the top of the water with a stick. Okay, well, we'll have to improve your tactics over time. But at least you know there's fish. All right. So USD CAD, we had this coming down to this price. It only went to that price. And then it broke through our channel, and that's the big stink, right? So speaking about tactics, okay, is this are you going to use channels this way to sort of alert that your downtrend or uptrend has slowed down and maybe you need to adjust? Is this a tool that you appreciate? Did you even use this at all? Okay. So you can see that my trade plan, aka my guess, is that we could head down here. Oh, but it only went down to here, kicked off of that. All right, so all right. Now there could be a sell zone here, right? Where would a bear set this up? Bear would probably look for a 618, right? Right? I think we could assume such a thing. It's very similar to a double top as well. Then you try to throw in some pivots and all that, and you start looking for resistance for bears, which is another, if you're a bull, it's just a place to definitely not buy, or maybe definitely move your stop, or maybe definitely take some profit. Okay, but you should be able to anticipate where the bears will be in such a way, like in this bearish move, we could predict where the bulls would be, either here or here are the two tops, right? Well, those tops are going to act as support. So it's within reason, right? So now where are those buyers going to have doubts? Oh, probably up in here, right? Right? Because we could assume they're going to measure this bottom to that top, and boom, 618, snap. The boys, the boys. Right? So just saying, keep an eye out. If you're a bear, that's an entry. If you're a bull, that's an exit. Oh, and this cat, let's see, let's go back. Yeah, it was actually. Good call, Martin. Martin. Nice, yeah. I appreciate that you caught the biohazard version. Okay, let's go back to Ryan's. A few weeks ago, you also mentioned a possible triple top at WR2. Oh, here? Yeah, that's fine. I mean, it's the same thing to me. Yeah, yeah. Sure. It's all good, man. Top is a top. 618 is a 618. Mark McRae, who's that? He's the leader of my cult. No, very old trader. All right. I thought it'd be like your cult leader with the crooked eye. Like, don't look at him in the eye. Don't, don't ever. Yes, sir. You're right. You're right. The ship should be here soon, and we will all be liberated from this planet of staring in the eyes, people. Yeah, divergence, sure. So the way I describe divergence, Katie, is it's simply traders getting out of the market. So imagine a very bullish market. So how about, okay, we'll go with this one. So imagine this is a very bullish market, and there's bulls along the way. This retraces, more bulls get on, and then we hit the target. You see this time early in the month and not late in the month. So like I told you, hey, you should probably get out, right? So anyway, so it comes down, not because the market turned bearish, but bulls, not all bulls, but many bulls took profit as they were supposed to do. But not everyone could be smart and good looking and modest like us. So in this case, very often you get a retrace before a drop, if it does drop, right? Well, most of these, or these bulls have gotten out, right? And the market starts drifting up, and if it starts heading down, one of the things you'll notice is that you'll get a divergence in oscillators. Okay, and or how the way I describe this phenomenon is that the divergence is showing that the market has less and less bulls. Okay, so your oscillators might look like this at the same time that we're double topping, and what this is telling me is, we have on a scale, let's say, we have X number of bulls, right? And now, even though this is double topping, this is making a lower high. That's simply the less amount of bulls. Now, the market still may be bullish. We can get there, Eric. Okay? But the divergence is what I'm telling you about is when market's doing this, right, and price is doing that, the way that we can describe it, so it's not just a rule and a thing you look for. You need to have the understanding, right? Well, the understanding is we lost many of the bulls on this first drop. Okay? So it rises up again, and then this time we're going to wipe out the remaining bulls, and it will turn bearish. Okay? So the request now is to add MACD, make you want to jump. So we can just go to a basic template. Okay, so now imagine we get a scenario like this. Okay, that would be the beginning of a double top, right? But your MACD here would probably look like this. So let me draw this out. Let's use an arrow this time. Let me go black. Okay. So while you have this going here, you would have this going there. Okay? It's literally less bulls is what it's telling you. So we're making we're challenging it now, right? We're trying to do this, but we're at the water line on MACD. There's very few traders in this trade. This challenge back to the top is a lonely one. Right? You've given your battle cry, come on everybody, charge! And you're running toward the enemy, and you're like, hey, come on guys! Where is everybody? Yeah, don't you hate that? Come on! They're like, not this one. Yeah. We have them. Come on. Yeah. So it's a lonely battle cry, right? A battle cry on deaf ears and a crooked eye. All right. So that's that little divergence exercise. I want to get away. So what are you guys going to do over the holidays? Remember, there's no webinar Thursday and Friday. Yeah, Eric says, and some people, some traders would sell that. Yeah, absolutely. I mean, again, it's common sense. If you know the bears are going to fail, then that might be an opportunity to you for a bull. I just wouldn't try to convince you to be a bear in Turkey. Oh, Robert's going to do some FX boot camp? Cool. Yeah, which course are you guys doing? Yeah, basic training is a great place to start. That way you get the Pegler pitchfork and stuff. Swaying and fundies. Cool. Buy or sell? Oh, no. I have no idea. Where can I have access to FX Bootcamp? You go to fxbootcamp.com. Come on, Kenny. You don't have internet where you live? What's this .com you talk about? Is it a wizard? What do I call you, old, great, and powerful wizard? Some call me Tim. Tim, oh mighty and great, powerful Tim. Yeah. Oh, you gotta have that. His price, yeah. See, I wouldn't skip around. I would always start with basic training. I do fundies and swing maybe at the same time. Price action, I like. I mean, obviously, you got to have price action. Yeah, cool. Well, that's a good thing to do during the holidays. I will be writing a 20-page paper. Yeah, this is what I do with my free time. All right, so let's move on to take a look at the yens in general. We'll isolate them out. Is that right, Joe? That's really cool. Yeah, that would be a fascinating thing to study. So right on, man. Yeah, which is great because I think all the basic stuff they teach in finance and economics, well, I'll take finance specifically. It's just flat out wrong and doesn't make any sense, and nobody in the real world uses it, right? So you're like, so there's obviously an opportunity for you in behavioral finance to come in and improve and adapt the old models at the bare minimum. Grady says, Wayne, I have swing trades open with over 100 pips now. When should I lock in some profit? Are you near the targets? Yeah, I mean, that is just like, there's one assumption, right? A heroic assumption that people are rational and do what's in their best interest, right? I say, okay, that makes sense to me. I believe I'm a rational person, but I don't exercise enough. I drink too much alcohol. I smoke cigars. Wait, none of that's in my best interest. But other than that, I'm pretty rational, right? So you're like, wait, people do irrational things all the time, especially when it comes to money, because people are emotional. And by emotional, I mean stupid. I don't see how emotions help anything at all, ever, in any situation. I think they're a huge liability. So, anyways, accept love. Yeah, so good for you, Joe. I hope you change it all, and if you don't, I'm going to. All right. All right, so we were going to do some yens. USD yen bouncing on our double bottom cluster. Oops, that's not what I meant to do, is it? No. What do you think? Is that a random walk? Monthly support, WM2. So the question is, if it's not a random walk, are you going to treat it like this? It's Kool-Aid you could drink. I don't know how good it'll taste, but it's plausible. Well, you know what I think, Eric, and you're leading to something that Joe, I'm sure, is an expert on, but there's this idea that what I just said is I'm rational, but at times I act irrational. And so there's a hybrid where much of the time we try to be rational. So, for example, I think most people on Earth want to do a little better than their parents and provide a little bit better of a life and opportunity for their children, for example. Not everyone wants children, whatever, you know, but I'm just saying, just in that basic assumption, we want to be a little better off, and we want to provide either society in general or your particular society, your children, to be better off. Right? I think that's a reasonable assumption that most or many of human beings have. But then there are times of like crisis when people act irrationally, where it all breaks down, greed and fear and all that kind of stuff, right? So it's, can you predict, let's say, like Boris Schlossberg and his 5 Bollinger Bands, if there's a time when most of the time we're within 2 standard deviations of normal, but then there are situations that we're put into where we're 3 or 4 or 5 deviations of beyond our normal, and how do we behave then? And then, of course, how can you predict how do you predict getting to that situation? You might be able to do that in finance. So, for example, you take that behavioral aspect of human emotion, and then you put in a business cycle, and I think you could probably do it. Right? We're mostly 2 standard deviations of rational. Then there are times when we're irrational. The irrationalness has been provoked, or a catalyst has been provided to get us outside that norm. So somebody lights your ass on fire, you jump. You're not worried about looking stupid anymore, right? So what is the fire? Can you predict the fire? And I think you probably can. You're probably thinking it's the slope of the marginal rate to consume. And I'd say, yeah, but it also has to do with disposable income. And then we both agree, yeah. Yeah, well, Eric, it helps to be a genius. Most people are not geniuses. Even really, really, really smart people, most of them are idiots. Right? So, for example, if you take me, or maybe you take Joe, highly educated people, great, but if all we do is spit out other people's ideas because other people told us those ideas, you're kind of like most of the people that have written Forex books, right? All they've done is read 5 or 6 other people's books and then wrote their book. Well, if I go to university and some guy tells me that I'm supposed to use CAPM for figuring out the price of a stock, and then I walk over and I tell someone else, let me tell you how to figure out the price of a stock. It has to do with the future, then the beta, and then you have to do the future dividend, blah, blah, blah. Like, oh my God. Right? A really smart person would look at me and say, you use CAPM? Are you mentally deranged? Are you stupid or something? Like, I went to Harvard, they taught me this. Yeah, well, it's wrong. You know what I mean? It's like, all right, so you got a PhD and you're telling me a bunch of stuff you learned in school and it doesn't have any common sense. It's completely wrong. But good job on that PhD, right? Kind of thing. Like, so it helps, yeah, Einstein disagreed with everyone and everyone disagreed with Einstein. But it turned out that Einstein was actually a genius. And he was 1,000 years ahead of everybody. Yeah, well, there's very few and far between. You know who I really would like to know more about? Newton. That dude was smart. And he had charisma and personality. Like Einstein would walk to work in his slippers kind of stuff, right? Right? But like, what would it be like if the genius was also charismatic? Like people like to hang with him and they listen to him. And he's like, yeah, I'm going to do a whole bunch of legal stuff over here. And then I'm going to like figure out this whole gravity thing. And oh, by the way, on my spare time, I cranked out calculus. I invented that. And oh, by the way, I'm an artist. And oh, by the way, I'm going to design my own buildings and stuff. And oh, I got to go back to this whole creating society and working through government. You know, most of the stuff he did was part-time while he was trying to build a government and lead people and build a society. I mean, oh my God. So, whatever. All right, so we have a couple of requests. Yeah, I'm looking at a lot of these yens. I mean, we kind of covered it, right? So, there was an Aussie, was it Aussie dollar? Euro Aussie and Aussie D. Okay, let's do that. Let's do Euro Aussie first since it was asked first. And okay. I want to get away. Okay. So, can you go over it? All right, I will go over it. Identify levels of support and resistance. Okay. So let's talk about these two levels. As a bear, should you sell at those levels? So, Jorge. So we know one thing for sure is those are horrible, horrible, horrible areas to sell. Now, if you're a bull, are they necessarily places to buy? Well, yeah, okay. If you're aggressively a bull, that is of interest for sure. That's a 50% retracement. Cool. And if that fails, boy, a lot less aggressive, right? So now let's add to this. What does this mean to you? Well, I don't know what chart we had it on, but I did this stuff for you guys a week ago. Do you remember when I did a relative strength exercise? Somebody asked me about the dollar index. I'm like, dollar index? What kind of lame-o uses dollar index? Right? Just do it yourself. And boom, I did a relative strength exercise, and it put us long on the euro yen. Right? And it seems to me that we would have had this as a target. So the caveat to everything on this other chart here is that you should already be done for the month and going on holidays. In my opinion, and I have no way to prove this, but in my opinion, the fact that we're hitting this a day before the entire North, well, I can't even say North America, the entire United States goes on holidays. I mean, I don't think it's random walk that we're hitting our monthly target essentially the day before everyone goes on holidays. And by the way, this is a slow trading week. A lot of people take the whole week off. Imagine if you had a job. I'm sorry, I wasn't supposed to say that word. Let's say you were not independently employed. and you had to ask your stupid scumbag manager, you know, who failed at everything in life and now has to do this job of managing you. You know, if you ask that scumbag manager, hey, can I have some time off? Well, you could take Monday, Tuesday, Wednesday off. Thursday and Friday are holidays. So you could take 3 days of your pathetic vacation. How many days of vacation do you get? I get 14. No, 20. Oh, you get, really? That's great. That's really nice. So anyways, for 3 of those days, you can take off Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. 9 days for the price of 3. Okay. But so I think a lot of people are just not in the market. So the fact that we're hitting monthly targets just before Thanksgiving, to me, is not a random walk. And you know, so what are you going to do now? Buy this dip and rally it up again? Yeah, I mean, there's nothing here on this chart to say otherwise. You understand? I'm like, okay, there's nothing here technically that says you couldn't buy this. This is still very bullish, sure. But then you go in here, and I'm like, well, maybe nobody's going to buy the dip. Why? Because they're sleeping in their lazy boy, watching a football game with bullet chips on their belly, right? Turkey and gravy in their belly, and they're like this. And you're like, oh my God, this is the perfect retracement. I'm gonna bet the farm on this, and it doesn't go up. And you're like, why didn't it go up? So I have a feeling there's just spidey senses tingling. That's it for now. Right? You're supposed to hit that and go, check please. Yeah, this is great. Gotta go. Check please. Nice. Took it up to the MR2, done. Right? You know that whole rule thing, right? About 100% of the time you get out at R2. And the other one was Aussie dollar, right? Well, by the way, going back to the Euro Aussie, Euro was a lot stronger before, you know, Germany failed to put together a government. So you get like how we slammed into those targets, and Euro is a lot less interesting. See, the problem with the world, including myself, is we start to believe Europe is fixed. And then the Europeans show up. And we realize it's the Europeans that are the problem. Like, oh my God. We always get this started, right? I mean, I like the idea of the European Monetary Union, and this, it's great, right, to have everyone come together and use a currency and stuff. And then you're like, wait, right? The Spanish, the Dutch, the English, they're all supposed to get together and what, deal with whom? The French and the Germans? And you're like, well, that's a tall order. And then all of a sudden, like, the Italians and the Greeks show up, and like, who are these guys? And you're like, oh, wait, this is going to get complicated. Right? You're like, wait, none of these guys are going to work together at all. I keep telling my Dutch friend, too, like, the Dutch should have ruled the entire world. But the Spanish and the English got together to defeat the Dutch, and then Or was it the other way around? No, the English and the Dutch got together to defeat the Spanish. Once the Spanish were beaten down like dirty dogs, the English attacked the Dutch. So, whatever. Silly history. All right, so we're going back into here, Aussie and dollar. Yeah, sure. And Katie, they make the kids pay for the mortgage. Yep. If that don't work, just have more kids. So what are we doing here? Someone said Aussie dollar. Look at Aussie dollar. All right, let's look at Aussie dollar. We have support, but not at a pivot. We have resistance up into here. So the first thing that bothers me is we're not at a pivot. I don't know if I can trust the bottom. Okay, so I think by definition we are in a sell zone, don't you think? So we can't buy here. Now, if you want to buy that, you can use the moving averages, although on that time frame it's predicting a double top. So let's see. Yeah, so maybe you get a 3A2 or something. But this is danger zone in here. Yeah, it's. I think a lot of these things we want to be bullish on, and I get it. I totally get it. But we need to be cautious, and we also should assume that Wednesday there'll be some volatility, some volume of trading. Thursday there'll be close to none. Friday there'll be a little bit. So the closer we get to holidays, remember it's not just Americans on holiday; it's banks shutting down and stuff, right? So you'd have to assume that even if it did bounce here, there's no guarantee it's going to rally up for the next couple of days, right? So that's how I would trap it anyways. Yes, Ryan, thank you. You know what, let me get a coffee. I'm just dying for a coffee. Hang on. It's not an addiction. All right. Forcing a bias, yeah, well, all right, that could definitely happen. see what you got. ZAR, did you trick me? You tricked me. You tricked me. Okay, daily. So I imagine you're a bull. I only say that because it's ZAR. All right, so, okay, daily 21. This says it's got some room to fall. So you're down into here looking for a turn. Yeah, very mediocre turn though, isn't it? See, the problem with this is you're basically looking at a 786 or maybe even possibly worse, right? See, if you were a strong bull, what is this, 50%? That would have been okay. That's actually almost a 618. And you could even have it measured from this bottom, okay? But whatever, let's do it from this, okay? This is a 100% retracement, or 786, depending on how you measure it. So that right off the bat is a warning sign. Also, this idea of Merkel not being able to form a government over the weekend. Bloomberg was even pinging me on my cell phone. Bing, Merkel can't form, and I'm like, oh wow, that's going to be bad for the euro. So it's just like your euro has lost a lot of its vigor. Okay, but you know it's okay. I mean, but if it does turn, then sure, because you still got the daily 21, right? Okay, because this is what you're trying to buy in here, right? This says it can fall further, however. Okay, and again, from here to here to here is like 786. It's not as aggressive as I would like it to be, but it is what it is. From here to here is 786. So let's see, off of the green. Yeah. I mean, if you get that, you get that, and that'll be fine, right? You know what I mean? It's one of those setups, and there's lots of those these days, where you trade it because it's the type of thing you would like to trade. It's not necessarily in the market conditions that you would like to trade. Brandon says, as a bull, are you not obligated to? No, what you could do is take the second one. So for example, Brandon, let's say you're a bull, and that's all good. Let's clear this out. This comes down, 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 hits support, so you're like, okay, this might happen. So it begs a question, you know, when do you actually start buying? Does it have to be this in here? Does it have to be in here? Maybe you start buying that dip. Okay? So you could say it flipped on this time frame, but maybe after a higher high of the second high, not the first high. Okay? So you don't trade the double bottom. This is in situations where the market's been falling, right? So you say, well, you don't buy the double bottom. You don't even buy the 1, 2, 3. You buy the next one after the next breach or something. And then you start aggressively buying after it's turned north. Okay? The way, it's a question of aggressiveness. How about this, Brent? What if you thought of your trading from the point of view of 1 year? Okay? Or what if you analyzed your trading habits week by week, not day by day, or trade by trade? What if you only looked at data like how much did you make this week? It would probably change your trading behavior a little bit, because you're not sweating over which one you got in, the first one, the second one, the third one. And over time, what you'll find is a lot of your more active trades get washed out by more active losses and break-evens and stuff, right? So what if all you did over a year? So imagine now all you're really doing is looking at a year. And when the markets were up, all you did was buy. And when the markets were down, you didn't do anything. And you were obligated by your rules of engagement to wait for the double bottom, higher high, higher low. So maybe you only trade 30% of the 30 to 50% of the year. You're actually making trades, but you're buying dips and uptrends, or you're selling rallies and downtrends, and the rest you're just waiting, right? And then you go back and look at the end of the year and you're looking and you're like, oh, well, I have X amount of profitability. So is it aggressiveness? It may just be more patient. Right? So if you're a bull, how do you buy in a downtrend? Well, you don't. Okay? And maybe if you've only been trading a year, maybe you look at this past year and say, well, I don't see it, Wayne. And I'd say, well, yeah, okay. This year was a bit of a wash. Last year was really tweaked because of the U.S. elections. So it wasn't just elections. It was the fact that the U.S. was guaranteed to have a new government. Whatever that means is risky, right? But what if you looked at it over the course of 10 years? Oh, omnipotent one. You say, well, from that point of view, it makes sense. So maybe there's a hybrid where, again, maybe instead of looking at your trading behavior on a yearly basis, maybe a weekly basis, right? So what if you only made 200 pips this week? Does it matter if you made 16 trades or 1 trade or 2 trades? You're like, yeah, it was actually 2 trades, but I didn't trade Monday, and I didn't trade Tuesday, and I didn't trade Wednesday. But on Thursday, I got that in the market and finally turned. So on Thursday, I bought, and by Friday's close, I was up 100 pips on 2 different trades. Done. Right? So you might want to challenge yourself. And, these holidays are great. Go back over your charts and look at the charts. Open up Euro USD, for example. Look at a day chart. Look at a weekly chart. And just try to say, well, if you had known the future, how would you have traded it differently, right? Are there patterns you're starting to see on a weekly chart? Remember, they don't include fundamental analysis, but can you see how there could be a 3 or 4 or 5 week pullback and then a 9-week drop? And you're like, oh, I could have watched that. This was a simple 3A2. Oh, that's a simple oscillator. I tend to miss those, or something, right? Just tweak your point of view. The activity of you on a holiday spending even just 20 minutes looking at your charts, changing the point of view, and thinking about it will make you a better trader than someone that just goes away from trading for 4 or 5 days and doesn't think, doesn't try to refine. I would do that activity if I were me. How would you trade this year differently, right? So get off the 15-minute chart, the 1-hour chart, the 4-hour chart. Spend some time on a daily chart and a weekly chart, I don't know, and just start looking at moving average crossovers, oscillator crossovers, Fibonacci retracements, and say, oh my God, I actually have days, if not weeks, to set up some of these swing trades. And then you're like, after taking Wayne's swing trading course, or looking at monthly pivots and using weekly Fibonacci's, you're like, oh my God, some of these things lined up and we're screaming 800 pip trades, right? Come back on Monday with that. Yeah, Ryan says a lot more focus on monthly and weekly swings built on technical and fundamental trends. Yeah, well, but that's it, right? We get so caught up in the 15-minute. And I think if you trade the 15-minute chart a lot, let's say, you may find that some of the time it works really, really well, and then it just stops for really strange reasons, and then you give back a couple of trades, and then you get on the new way, and that works really well. And if you look at that trading over the course of a year, because of course I've done all of this, you'll find that you're giving back 30 to 50% of your profit at these weird, change of trends. And the next step is to say, well, how can I predict these change of trends before they've happened? And that's where higher time frames, bigger pivots, that kind of stuff starts to kick in, or Fed meetings. Go on your charts and plot Fed meetings on your charts. You'll see it's interesting. You're like, oh, a lot of these tops and bottoms occur around Fed meetings. Oh, right? And just come back enlightened. Because the worst thing that could happen to you is you're still trading the same way as you were trading last year. Isn't it? So anyways, I got to jump, babe. It's been real. I got a headache now. I don't know what's going on. Okay. So Kenny says, what do you think about pound Aussie? Boy, it'd be a lot like the other Aussie pairs. How about identify the next levels, the 2 closest levels of support, the 2 closest levels of resistance, and then use some moving averages and oscillators to trade. Because remember, if you're buying at support and selling at resistance, you probably won't lose as much money as you're currently losing. And at the very best, maybe you'll make money. At the very least, like, you won't lose much. You might actually make something. You might get lucky, right? So you don't know, right? But very often when you start doing stuff like that, you're like, oh, well, I can't sell here. Good. That just saved you money. Douglas says, thank you for the training videos. My pleasure. I think I'm going to bust out a few more. I've been jonesing to do a GDP thing, because we talked one about we broke down GDP and inflation. We should probably do like a little CPI kind of. I've been wanting to add to that. trading course. Not here Thursday or Friday. Yeah. But I'll be here tomorrow. Look, I'm fading away. Oh my God. Just go to the light. The light is calling me. Oh, wait, before I go. Before I go, I have one last thing to say, right? If you want to know for sure, guaranteed how to make $1 million, it's easy. Just follow this rule. Oh, I didn't quite get it out. Yeah. See you tomorrow, guys.